Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, May 4th. Risk disclaimer in front of you before we go over all the themes of the day and all the price action and all the movers. Risk disclaimer in front of you, everything that we're going through is for information purposes, only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So yes, I mentioned the movers for the day. Well, there's a lot of them. This is a very busy time. Not only did we get the Fed meeting yesterday and the ECB meeting this morning, but just a plethora of earnings reports. And as I've said before, as we started to enter the earnings season, you're going to get a lot of reports that could be there's going to be negative reports and there's going to be some positive reports, and many of those positive reports are going to possibly set up for where there's going to be leadership over the next quarter. So that is in fact exciting. Now, of course, very difficult to catch all of these names on earnings because it's very unpredictable. I was just looking at two different software names after the close today. Like BILL is a software name. I think that's up about 11-12% after hours. And then you have Team that's also down about the same. So these are similar to me anyway. I know they do slightly different things, but they're in the software group. And to me, it's better just to wait to see which names, which companies are executing well, and it may force institutions to actually accumulate the company after it reports earnings. So I will go through some of those names. Why don't we talk about Apple for a second? Apple not moving too much there after hours. Of course, that's what everybody is going to be talking about, what Apple did on its quarter. Yes, I get it. It's a very big company. When you look at the Qs, what's the percentage at this point of Apple in the Qs? It is the second biggest company, just under Microsoft. It's 12.7% of the Qs, and for SPY, the S&P, just to kind of give you these numbers so you know where this company sits in the indices. It's 7% of the S&P. So yes, Apple is a huge company. So always I get this question, or I see it on Twitter, where they say, geez, as CNBC just reported, well, I don't get why the company's not down. They missed on some of their numbers, their iPhone numbers year over year, still up, but up 1.5%. Services had some gains, but the Mac and some other areas, the iPad, were down 13%. So, you may look at that if you're kind of new to trading or investing and say, oh my God, that's horrible. The stock must be down big. Well, what really matters in trading and investing is where the analysts are expecting the numbers. And this was actually, if we look at the raw numbers here, let me just close this, or what the analysts were estimating, it's actually like a lot of these numbers beat their expectations. So again, the raw numbers are interesting, but it really depends whether the stock goes up or down is basically what dependent on what the analysts think for the quarter. So if you beat estimates, a lot of times your stock goes up. If you miss what the analysts are pricing in, the stock goes down. So keep that in mind always, right? I mean, looking at the raw numbers and the changes is not going to get you there in terms of whether the stock is going to go up or down after they report their numbers. All about the estimates. And it's the same thing, by the way, in the economic reports too, right? Analysts, there's various different estimates, and we get a jobs report tomorrow, which I will give you that. Not only have we had a lot of earnings reports, we also have a ton of economics this week. ISM numbers tomorrow, it's the non-farm payrolls, and they're expecting 185. So if the number goes up or below 185, not what it did, not the difference between year over year, then the market's going to move, right? I'll say that again, right? It doesn't matter what the non-farm payrolls were a year ago, right? And what the change is versus that. It depends on what the analysts are expecting, what the survey number is. Okay, so they're expecting 160. Again, for the payrolls, I think this is the most important. For everybody will talk about this on the news wires, but it's going to be this number that's most important. right? Average hourly earnings month over month. They're expecting 0.3%, right? Why is this so important for the month over month change? Because that's going to give you a fresh reading of whether inflation is going up or down. And of course, as we heard from Mr. Powell yesterday, right? They're still very much monitoring what inflation is doing. Interesting. Speaking of which, before we get into the charts, here's what Fed fund futures are implying, right? This actually shifted quite a bit, right? They're now actually pricing, there's not a high probability of this, but it's now shifted towards maybe a cut for the next meeting. Anyway, that's what the market is pricing in. Whether or not that's correct is a whole nother thing, but that's what the expectations are, right? Going over that principle quite a bit here in this video. So since Apple's not really moving, just basically it's up a couple bucks, which is basically where the stock was trading yesterday. So not a big move. They were only implying about a 4% move. So where are we in terms of, well, so before we get to the daily charts, we'll do this backwards. We'll look at the 1 hour chart here in the S&P futures, and notice that we're basically back to last week's lows, right? So that whole big move, remember that we saw, Thursday and Friday of last week, well, that's gone, right? And round we go. We're just not going anywhere really in the S&P. We're now back into the 50-day moving average, so we're kind of at the lower end of the range. But man, this is a really choppy, move to kind of give back that whole that whole move that we saw towards the end of last week. So two steps forward, 2 steps back, right? And that's where we've basically been, and we're basically back to the price action of where we were back at the end of March. So yes, it is a little bit of a comedy. I was making a lot of jokes today on Twitter. I hope that you don't mind them, but sometimes with the market, it is what it is. It's pretty dry stuff when you're trading all day long and looking at numbers like this all day long and chart patterns. So you have to joke around a little bit here and there, right? To keep your sanity. All right. Qs, which, again, with all of these things that are going on in the banks, they seem to be a small flight to safety, but really difficult to trade. I mean, here's the price action for the day, a little bit of a move lower, can't really go too far to the upside. And every time they try to kind of turn the corner out in the afternoon, when you see long wicks like this, this is just the Qs, right? You could tell that the sellers are in charge, because every time that there's a bounce, it's getting hit with selling pressure. So the buyers may be able to overcome this now that Apple's reported, and I wouldn't be surprised if the Qs rally a bit tomorrow. But again, very tough sledding and basically back to where we were Thursday. All right. So that's for the S&P, and for the Qs. The small caps look different, right? So they did come off the lows to the day, down 1.1%. But I mean, we're borderline, breaking down here. Watch this 165.67, right? So this is the small caps. That's on the weekly chart. And then of course, IWC, which is your micro caps, right? We've brought this chart up a number of times, but this looks like it's, in a breakdown area of the market. So again, when you hear people talk about bull market, bear market, it depends on what group of stocks, right? There's some stocks that are deep in a bear market, some stocks that are in a pretty good bull market, right? It really depends on the group and the stock itself. All right. So I wanted to go over a couple other things here. If you look at the VIX, right? The VIX did get back up to 20. I think that's an important psychological area. Again, if you look at this chart, even though the VIX was up, 9% today, it's still, it doesn't look like it's really that punchy. I would pay attention to the 20 level, which is basically where we closed. And we'll see if that begins a move in volatility, or if it's just basically, moving back into the majority of the range. I would think that's the case for now, but we'll watch. I mean, we still have some event risk that's going on. We've got this debt ceiling that hopefully the politicians will come to some type of agreement and either extend it or do something else that so that the average American doesn't have to worry about the the country being downgraded in terms of credit terms. So we'll see if that happens. But we do have that on the horizon to watch out for. And then, of course, what's going on with the banks, right? I would think logically that, again, I say logically because the Fed and other areas of the market don't always exhibit logics, so keep that in mind. But I would think that you're going to be hearing from either the Treasury soon or the Fed about what they're doing to shore up deposits. Right now the insurance is $250,000 on deposits, right? That was set back in the financial crisis. So I would think, and we said this months ago, right? Because all of this started to go down in March, is that a logical thing would just be to bump that number up, right? Considering that they're going to have to insure a lot of these deposits anyway. So in any event, I won't go any more into that. We'll start to look at some stocks here in just a second. Gold, of course, right? I mean, let's look at what gold did for the day. That's getting a lot of attention. Yes, it is very close to making, I think it did make a closing high for the year. And I'm long some of this. I've been long I was long GDXJ. I did take that trade off. I just feel like I can get back into gold. Gold and gold miners are tricky, right? Look at the GDXJ ETF closing right at that top of value. I also had a target right here with this Virgin point of control, right, which is right at 42.30 or 40. I took a target, or I took a target here, and then I took the trade off, right? You can't get complacent in any areas of the market right now, even if you think gold is the right place to be. I tried the gold trade a couple months ago, right? And a lot of these areas kind of pushed back pretty decently. So and then it provided a nice setup here, but it's got to get through this. I am long some FNV. This was a name that I was long last week, and I took it off prior to this is Frank Nancy Victor Franco Nevada. I took it off right before it reported earnings. See if I get this to work. So I'm looking for this to move to this 164 Virgin point of control. And if it checks back to 155, I could possibly add one of the targets that I've taken in it. All right. So that's a story, gold miners, definitely one of the stories of the last couple of days. And but again, I think with any trade, doesn't matter gold or anything else, you cannot get complacent right now. And you have to be selling into strength right now in this market, considering the range that we just talked about, in the S&P and the Qs itself. In terms of other places, right? One of the things that I thought was interesting today was biotech, right? That has been very strong and kind of continues to be, really nice outperformance for the day. Let's bring up the daily chart here. Notice that we are back above the 200-day moving average. You could also see I've got a trend line drawn in here. So let's see if this continues to kind of relatively outperform for now. But I'm impressed, right? I'm impressed with what the biotech names are doing, and a couple names. This is more medical devices, but LNTH had good earnings. Really slid a little bit, going into the earnings report, but out to new highs. Another name that I watch is Bruker. Did not close above its value area. Again, 82. By the way, if you have any questions about what value areas are, volume at price, Virgin point of controls, you can see my pinned tweet on Twitter. So for example, if this is all foreign language to you, value areas and volume at price, Virgin point of controls, you click on this link that says learn more here, right? And that will bring up what the TTG market webs are, and it will give you a tutorial about every one of these things that I'm talking about. All right, so that's right on my Twitter page that you could go to. But notice that this had a nice day today, but it did not close above value. But I like this company, Bruker. All right, so again, $82 will be something to watch. A few other, outside of biotech, just other, if you would have gone through and looked at some of the names that had gap ups today, right? This is Ferrari breaking out to new highs, right? Do you think that that's recessionary, or do you think that's more expansionary? Now, of course, Ferrari caters to the super rich, and I think that market is doing pretty well. Look at the home builders, for example. This will be a good test. Speaking of for the home builders, watch the 74.31 level. I am long this group and maybe looking to add into this group. Same thing with like a Toll Brothers coming into the 20-day moving average. DHI is another one too. Again, just looking at some of these home builders which pulled back a little bit. This thing was down 2.2% today. Again, Thinkorswim just so here's the level, just like an ITB. Watch 106.77. Right, so nice move up on earnings for DR Horton, right, and kind of coming in a little bit. This could fall again further to the 20-day moving average, but for now I would watch 106.74. Right, other names. But just mentioned LNTH and Race, but Shopify had a good number. Plus they announced more layoffs today, which has been very good for growth companies. My take is that they overhired a lot of these companies. Datadog, right? Also a gap up, right? Now, again, I'm not sure, this is still in a downtrend, but, a 14% move on earnings is pretty strong. Hubs, which came off the highs a little bit, took out that VPOC. We'll see if this kind of settles in here. That's a name that I'm watching as well. All of these names go on our earnings list, by the way, right? And then we can kind of watch them as the, after they report earnings. And then a very interesting one too, that's also in the biotech space, which was NTLA, right? So this is what, why don't I bring up this chart first for NTLA. So this is the weekly chart. Right, and notice that this is now getting inside its value area for the year, right? So that level to trade against is 39.65, right? I think that's going to be pretty interesting. That might set the 80% rule off for that value area. If you don't know what that means, again, go to the to my Twitter page and you'll find that. But really nice move up 13% in this one, and we'll see if this one can kind of maybe get the stock going. A couple other names, names that reported after the close today, again, a lot of gap ups and gap downs, right? So again, some of these things you have to laugh at a little bit. Look at DoorDash, by the way, right? The numbers for DoorDash, right? So to me, this is just craziness. Because this is one of the most excess companies that you could possibly think about. Like, for instance, right, if I was younger, right, and I had to cut something, I would probably say I wouldn't be ordering, forget about ordering, food even. That's a expense. But using DoorDash, which adds a huge expense, and let's face it, I'm sorry to say it, but you have to be pretty damn lazy to be, or you're intoxicated or whatever, and that's the reason why you're using DoorDash. But regardless, that is a very discretionary expense. And look at the money that they're making. DoorDash, right? All they do is deliveries. Now, again, it's not just that. I'm sure that there's the elderly too that are probably using this service too, but I know a lot of young kids that are doing those types of things, and they're spending, not only are they spending for takeout, right? They're not even picking up the takeout. So they see the second quarter marketplace 16 billion versus estimated 15 billion for a delivery service, right? So until this company starts going down, again, the chart looks interesting here. I can't buy this company because I do think that this would be the first thing that people would cut if they were facing some type of a cash crunch. But again, to me, it's just a proxy to say, wow, people must be doing pretty damn good if not only are they continuing to order takeout, but they're also spending money for delivery, right? So again, it kind of just makes you think that, I've talked about this before about how all the analysts try to predict a recession every month, which has been going on now for about a year and a half, and they'll continue to do it. And eventually we will get into a recession, right? Because cycles do happen. But I don't think these analysts are going, you go to an airport, it's packed, right? What are the cruise lines reported, right? They beat their numbers, right? And DoorDash beat their numbers. So, I mean, you look at some of these things and say, hey, people are still really spending discretionary wise. So, I think it has been so far this year a very interesting, intriguing market, a very also challenging market to trade. So if you're finding that this market on a day-to-day basis, if you're an active trader like myself and you're having a difficulty in this market, take a deep breath, get away from the screens a little bit, right? It is especially, in addition to all these different moves that we're seeing, the moves that we're seeing in the banks, it's a very difficult time to trade during earnings season and around a Fed meeting. So keep that in mind. That's usually the case, right? When you're getting all these results that are coming out, it's usually difficult. So that's my main message for this video, is that there's a lot of movers that are going on. Right now, the indices are churning, and there may be some good opportunities kind of once we get through, and I think good to get Apple out of the way, because people, I think, like myself, are more fearful that Apple's going to turn in a bad quarter than I'm actually looking for upside in the name. All right, guys, that's it for today's video. Have a great night. Hope to see you in the Tribeca Trade Group trading room, pre-market trading room, which starts every day just a little bit after 9 o'clock, and we go through all the movers in the morning as well as setups that we're looking for that day. Have a great night, everybody.